Hey everyone, and welcome back for another deep dive. Today, we're going to be looking at Bitcoin. Specifically, we're going to be looking at its relationship with something called the M2 money supply. Now, if you're not familiar with that, it's essentially all the cash out there plus the money that you've got in short-term bank deposits. Now, Bitcoin analyst Joe Consorti, he noticed this kind of intriguing connection and suggests that it could signal a Bitcoin price correction, maybe even a drop of 20 to 25%.
Wow.
So we're going to be exploring whether that prediction holds water, and we're going to be unpacking some skeptical voices too.
Okay, sounds good. I'm ready to dive in.
All right, let's do it.
So M2, what is it? So M2 is a measure of all the money available in an economy. And it's important because it can hint at inflation.
Right.
When M2 goes up, it often means prices are about to go up. So let's put ourselves in the shoes of an investor.
Okay.
And say that you're an investor and you see inflation looming. Naturally, you would want to protect your savings from losing value.
Yeah, that makes sense.
You wouldn't want your money just sitting there slowly becoming worthless. So some investors turn to assets that historically hold their value during inflation. So things like gold, real estate, or even Bitcoin.
Oh, so you're saying that people are viewing Bitcoin as a kind of digital gold, like a safe haven from economic storms.
That's one way to look at it.
Right.
And Consorti isn't just pulling this connection out of thin air. He's got a chart that shows visually how Bitcoin has been closely following the global M2 trend with about a 70-day lag since September 2023. And to add to that, macroeconomist Lynn Alden found that Bitcoin has historically mirrored global liquidity trends 83% of the time.
83%. Wow, that's a pretty strong correlation. But you know me, I always like to play devil's advocate. This 83% figure has me wondering, what's the underlying reason for this connection? Is it just that investors are behaving in a predictable way, or are there deeper economic forces at work?
It's a great question, and it really speaks to the complexity of financial markets. While investor behavior certainly plays a role, there are likely more fundamental economic factors involved as well. For example, when central banks increase the money supply, which boosts M2, it can lead to a decrease in interest rate.
Hold on, could you unpack that a little bit?
Sure.
How do interest rates fit into all of this?
When interest rates are low, it becomes less attractive to hold cash in a savings account because you're earning very little interest. So investors might look for other assets that could potentially yield higher returns, like Bitcoin.
Ah, I see. So it's like a domino effect. Increasing M2 can lead to lower interest rates,
Right.
which can then push investors towards alternative assets like Bitcoin. It's all connected.
Yeah.
But you mentioned some skeptics earlier.
Right. We have folks like Davis Crentieri who believes Bitcoin is far too volatile to reliably track against anything. He compares it to trying to predict the movements of, well, let's just say a very energetic squirrel.
I can picture that squirrel darting all over the place. But what about the other skeptics? What are their arguments?
James Trek brings up a valid point about the influence of the U.S. dollar. He argues that the recent decline in M2 might actually be a result of the dollar strengthening.
Okay, so a stronger dollar could be masking the true impact of M2 on Bitcoin. Is that what he's suggesting?
Precisely. It's like a seesaw. As the dollar goes up, other currencies and potentially assets like Bitcoin might feel the pressure. And to make things even more interesting, crypto commentator Sam KB has pointed out that Bitcoin is actually rallying right now, even though M2 is near its lowest point in the current cycle.
That is interesting. It seems like Bitcoin is defying the M2 correlation theory, at least for now. So where does this leave us? It feels like there's no easy answer.
You're absolutely right. We're dealing with a complex system here. It's not just about M2. There are always other factors influencing Bitcoin's price.
We were just talking about how Bitcoin's price movements could be tied to the M2 money supply. But now let's throw another ingredient into this financial stew. President-elect Trump's policies,
Okay.
specifically his proposed import tariffs. I'm curious how those could play into all of this.
That's a great segue. Import tariffs, those taxes on goods coming into the U.S. could actually lead to a stronger U.S. dollar. Hedge fund manager Scott Bessent has pointed out that tariffs historically have had that effect.
Interesting, but to be honest, that seems a bit counterintuitive. Help me understand why tariffs would make the dollar stronger.
Okay, so imagine this. When tariffs are imposed, imported goods become more expensive for U.S. consumers. This often leads to reduced demand for those imports, meaning fewer U.S. dollars are leaving the country to pay for them. Less money flowing out of the U.S. translates into a higher demand for the dollar, which can push its value up.
Okay, I'm following so far. Fewer dollars going out means a higher demand for those that remain. thus strengthening the dollar.
Exactly.
But how does a stronger dollar tie back into Bitcoin, especially with this M2 discussion we were having earlier?
That's where things get really fascinating. A stronger U.S. dollar has historically put downward pressure on riskier assets. And yes, that includes Bitcoin. Think about it: when the dollar is strong and perceived as safe, investors might be more inclined to stick with traditional safe havens, like U.S. Treasury bonds. They might be less willing to venture into the more volatile world of cryptocurrencies.
Hold on a minute. You're saying a strong dollar could hurt Bitcoin. But haven't there been times when Bitcoin has rallied even when the dollar was strong? How do we reconcile those instances with this whole correlation theory?
You're right to challenge that. It's crucial to remember that we're dealing with a very complex system here. While a stronger dollar can create headwinds for Bitcoin, other forces are always at play. Things like overall market sentiment, technological advancements within the crypto space, regulatory changes, and even the fear of missing out, that FOMO we hear so much about.
So trying to predict Bitcoin's future based solely on M2 and the dollar's strength is a bit like trying to solve a Rubik's Cube in the dark. There are just too many variables to consider.
That's a perfect analogy.
Hmm.
The key takeaway here is that while these macroeconomic indicators like M2 and the dollar's value offer valuable insights, they're just pieces of a much larger puzzle. There is no foolproof formula or crystal ball, unfortunately.
It's exciting and nerve-wracking at the same time, wouldn't you say?
Yeah.
Speaking of excitement, where is Bitcoin currently sitting in terms of its price?
As of our recording, Bitcoin is hovering around $91,988, tantalizingly close to that $100,000 milestone. And we can't forget its recent near miss, reaching a peak of $99,571 on November 23rd. It's been a wild ride, to say the least.
It certainly has. Will it finally break through that $100,000 ceiling? Or will this potential correlation with M2 and a strengthening dollar drag it back down? What are your thoughts?
Those are the million-dollar questions, aren't they? But as much as we might like to make a definitive prediction, the crypto market is notoriously unpredictable. There were just too many factors at play.
That unpredictability is part of what makes the crypto world so captivating, wouldn't you agree?
Yeah, definitely.
But it also makes it challenging for someone who might be considering dipping their toes into the crypto waters for the first time. So given all of this information, what advice would you give someone who's thinking about investing in Bitcoin?
That's a great question. And it leads us to a crucial point about navigating the crypto world.
Okay, so it sounds like we've been on quite a journey today. From exploring the connection between Bitcoin and the M2 money supply to sort of dissecting the potential impact of President-elect Trump's policies.
Yeah,
We've covered a lot of ground.
we have.
And if there's one key takeaway from our deep dive today, it's that there's no magic formula or crystal ball for predicting Bitcoin's future.
Yeah, I'd agree with that. It's a complex interplay of many factors.
So for someone like me, maybe a little crypto curious, but feeling overwhelmed by all this information, how should I approach investing in Bitcoin?
That's where your own critical thinking comes in. You know, we presented a spectrum of viewpoints today, from those who see a clear correlation between Bitcoin and M2 to those who are more skeptical. The best way forward is to do your own research, weigh the evidence that we've discussed, and consider your personal risk tolerance. You know, how much uncertainty are you comfortable with?
So it's like a choose-your-own-adventure story in the world of crypto. You decide your own risk level
Right.
and navigate accordingly.
Exactly. And remember, staying informed is key. Keep an eye on the factors we've discussed. M2, the dollar strength political decisions. And of course, developments within the crypto space itself. Don't be afraid to ask questions and seek out diverse perspectives.
That's great advice. And speaking of questions, I have one final thought-provoking question for all our listeners out there.
Okay, shoot.
Beyond M2 and the dollar, what other factors should we consider when analyzing Bitcoin's price movements? What else might influence its trajectory?
That's a fantastic question to ponder. Think about the rate of Bitcoin adoption globally. You know how many people and businesses are actually using it? Then there are the constant technological advancements within the crypto world. You know what new innovations are emerging that could impact Bitcoin's value. And of course, we can't forget the regulatory landscape. How are governments around the world choosing to regulate cryptocurrencies? And what impact might those regulations have? Even the general sentiment within the crypto community itself. Are people feeling bullish or bearish? All of these elements contribute to the bigger picture.
Wow, it sounds like a giant interconnected web of influences constantly in flux. A bit daunting, but undeniably exciting.
It certainly is. And that's what makes the crypto world so captivating.
Yeah.
It's dynamic, constantly evolving, and has the potential to disrupt traditional financial systems in ways we're only just beginning to grasp.
Well said. On that note of endless possibility and constant change, we'll wrap up this deep dive. Remember, everyone, knowledge is power. Keep exploring, keep learning, and keep questioning. Until next time,